Hi everyone, I welcome you all to my YouTube channel. So today I am starting US taxation series. So if anyone wants to learn US taxation, then please subscribe to my channel. Okay, and if you have any queries, then please drop down those queries in the chat box below so that I will post short videos answering all your queries. So first we will start with the individual taxation, and as and when the course completes or series completes, we will also see the practical application of this taxation concept, that is US taxation concept. Okay, so first we will start with individual taxation. So individuals below the age of 65 should file form 1040. Okay, as in Indian taxation system we have ITRs, ITR 1, ITR 2, ITR 4, like that. In US taxation we have form form 1040 and form 1040 SR. Okay, form 1040 needs to be filed by individuals below the age of 65, and individuals with the age 65 and above that should file form 1040 SR. There is no major difference between these two files or forms, but one difference is that font size of this form 1040 SR is large, because this form is, or this tax return is filed by the senior citizens. So considering their age, the form has been created with the larger fonts. Okay, that's the only difference in these two forms. None other than other than that, no other difference is there in these two forms. Okay, and as in India we have due date of July 31st, like that in US taxation due date of filing the return is 15th April 2026. So I am considering, or I have started this series keeping in mind 2025 rules. As and when the tax rules changes, I will update those videos also in my YouTube channel. So please subscribe and learn more, as I love to teach and as I love to deliver the content. So one major change in 2025 tax rule is trump account. Parents, guardians, and other authorized individuals may elect to establish a new type of individual retirement account for the benefit of certain children. Okay, as per this rule, as per this taxation rule, parents or guardians or other authorized individuals of the child may open or may elect to open, it is optional, elect to open new type of individual retirement account for the benefit of the children. So the conditions for that is child should be born after 2024 and before 2029. So for these 5 years duration only, this individual retirement account is applicable. Child born before 2024 and child born, it is yet to come, but child born after 2030 is not applicable for this retirement account. And child should be a citizen of India, citizen of US, and meets other requirements as the case may be, as applicable or as and when notified by the US government. Okay, and individual may also elect to receive $1,000 pilot program contribution to the child trump account. So individuals also elect to receive $1,000 pilot program contribution to this retirement account of the child. Individuals need to use form 4547 for electing retirement account and for electing to receive contribution. Okay, for electing these retirement account or for creating these individual retirement account and to receive that $1,000 pilot contribution, the individuals need to file or need to use form 4547. Okay, so once they fill up that form 4547, and once they submit that, then that individual can be able to create retirement account and also be able to receive the pilot contribution amount of $1000. So this is the major update in US taxation. Okay, now we will start, or we will check who must file the return. Okay, so these are the slab rates as per the age bracket. These individuals must file the income tax return, that is form 1040 or form 1040 SR based on the age. So if your filing status is, so these tax rates or these tax slab rates depends upon your filing status also, like single, married filing jointly, married filing separately, head of household, qualifying surviving spouse. So here qualifying surviving spouse means the person or individual whose spouse has been like dead in that financial year or in that tax period. So that, like, you can say this is a widow of a dead person, or you can say, yeah, any person whose spouse has been dead during that tax period. For that person or for that individual we call as qualifying surviving spouse. Okay, so if your filing status is single, and if your age bracket is under 65, and if your gross income is $15,750, okay, then you must file tax returns, or you must file form 1040. And if your age is 65 or older, then the applicable limit is $17,750. And if you are married filing jointly and under 65 age, both the spouse, and if your total gross income of both the spouse is 31,500, then you must file the income tax return. And if you are 65 or older, that is any one spouse is 65 or older, then the limit is $33,100. And both the spouses or both the individuals age is 65 or more than 65, then the limit is $34,700. And if you are married and filing separately or elect to file separately, that is you filing your form 1040 separately and your spouse is filing your 1040 separately, then age limit is not applicable here. Whatever your age, that is 65 or above 65, then the limit is $5 only. Okay, if your gross income is beyond that $5 or $5, then you must file form 1040. And if you are a head of household and if your age is under 65, the limit is $23,625. And if your age is 65 or older, then the limit is $25,625. And if you are a qualifying surviving spouse and if your age is under 65, then the limit is $31,500. And if your age is 65 or older, then the limit is $33,100. So these are the tax limits, that is gross income and the age bracket and your filing status. Based upon this, most taxpayers pay the tax amount or file form 1040. Now coming to some notes. Okay, so if married and filing jointly, and if you don't live with your spouse at the end of 2025, that is tax period considered from 1st January to 31st December in US, that is calendar year is followed. Okay, so if you are married and filing jointly, and if you don't live with your spouse at the end of 2025, or on the date your spouse died, okay, and your gross income was at least $5, you must file return regardless of your age. So even if you are filing jointly, even if you are married and filing jointly, but if you don't live with your spouse at the end of 2025 or at the date when your spouse was dead or died, and your gross income is at least $5, then you must file the returns regardless of your age bracket is not applicable even if you are filing jointly. Okay. And gross income, now coming to gross income does not consider or does not include any losses. It includes only gains earned by the individual. Okay. And now coming to social security benefits, there is one important conditions regarding the social security benefits. Do not include this social security benefit amount while calculating your gross income unless, that is condition applied, married filing separately and lived with spouse during the year, or for single and married filing jointly if combined income, both the spouse's income, exceeds $25,000 for single and $32,000 married filing jointly. Okay. So social security benefits are not included in the gross income except when you are married and filing separately and you lived with your spouse during the year, then you should include that in your gross income. Okay. And or if you are a single and married filing jointly, and if your combined income exceeds $25,000, if your combined income, like for single, if the income is 25 or less than $25,000, then do not include social security benefit in your gross income. But if your income is $25,000 or exceeds $25,000, then please include social security benefits in your gross income or while calculating your gross income. And if you are married filing jointly, then the limit is 32,000. Okay. Now how the combined income is calculated here? Combined income is half of your social security benefits. Social security benefits amounts whatever you receive, half of that plus other gross incomes like your interest amount, dividend income amount, or in your salary or income from sale of house, all those plus tax exempted interest, all these are considered as your combined income. Okay. So if your combined income is more than 25,000 for single, then please include that social security benefit amount in your gross income. And if your combined income is more than $32,000, if you are married filing jointly, and then please include that social security benefit amount while calculating your gross income. If these limits are not applicable, then exclude that social security amount or do not include social security benefit amount while calculating your gross income. Okay. Now coming to if there is any change of address. Okay. If you are filing your form 1040 and with the old address, like with the existing address, and your address got changed during the tax period, then you need to use form 8822 to notify the change to IRS. Okay. Any kind of change, you need to use form 8822 to notify the change to IRS. You must file a federal income tax return if you are a citizen. Now who must file? Like we have seen the age limit and the income limit also. Now we will see who actually, like resident, non-resident, who needs to file the income tax return or federal income tax return. So you must file a federal income tax return if you are a citizen or resident of United States or a resident of Puerto Rico. Okay. If you are a citizen of United States or a resident of United States or a resident of Puerto Rico, then you need to file the federal income tax return. Filing a return depends on three factors: your gross income, which we have seen in the previous slide or in the previous note. Okay. And it also depends on your filing status and your age. So if you are going to file the federal income tax return, three factors you need to consider: your gross income, your filing status, and your age, and also your residential status is also mandatory. Okay, we will see this resident or non-resident concept in upcoming videos in detail, but please note that if you are a citizen or resident of United States or a resident of Puerto Rico, then you must file federal income tax return if you are coming in that gross income bracket and that age bracket. Okay, conditions apply: your gross income, your filing status, and your age needs to be considered while filing your income tax return. Your age and your filing status is determined on the last date of your tax year, which is 31st of December. If your 65th birthday is on 1st January 2026, then you are considered 65 for 2025. Okay, as on 31st December, your age status or your filing status will be determined, and if your age is like, if your 65 age or 65th birthday is falling on 1st January, then you will be considered as you will be considered as 65 years old at the date of 31st December, and you will come under that age bracket, that is 65 or older bracket. Okay, then you will be considered as a senior citizen. Then you need to file form 1040 SR. Okay, you must file a final return for a descendant, a person who died, if both of the following conditions are true: your spouse died in 2025, or you are the executor, administrator, or legal representative of the person or of the descendant of the person who died. The descendant meet the filing requirements at the date of death. This is for surviving spouse. Okay, so when a person who is applicable to file the income tax return and the person is died on during the 2025, then in that case you need to file, the legal representative or any administrator or the executor needs to file the income tax return on behalf of a descendant. Okay, so the descendant should meet the filing requirements at the date of his death. If he meets the filing requirements, or if his gross income comes under the taxable criteria, then the legal representative needs to file the income tax return on behalf of the descendant. Okay, now coming to last note: bona fide Puerto Rico resident. Okay, exclude Puerto Rico source income from US gross income. Okay, what it is telling is that if you are a resident of Puerto Rico for the entire year of 2025, then while calculating your US gross income, you need to exclude Puerto Rico sourced income from the US gross income, because for the entire year you were resident of Puerto Rico, and you need to include wages from US government or US agencies. You also need to file both the Puerto Rico tax return and US tax return. Okay, standard deduction must be reduced if Puerto Rican income is excluded. Okay, so for this you can see, if you are the resident of Puerto Rico for the entire year, then you need to do two things. Okay, you need to file Puerto Rico tax return as well as US tax return. While filing your US tax return and calculating your gross income for the US tax return, you need to deduct Puerto Rico sourced income from US gross income. Okay, and if you are a Puerto Rico resident but you are providing services or you are employed by the US government, then while calculating the US gross income, you need to consider your wages which you receive from your US government or US agencies for filing purposes. Okay, so that's it for today. tomorrow we will see next chapters or next concept of US tax returns. So please subscribe to my channel and let me know how this video was and what I need to improve in my video. So please subscribe to my channel and thank you for all your supports.